For the last few months, mortgage rates have gotten crushed. I mean, they just have. The markets have had to adjust their forecast for the reality that inflation is just not dropping as fast as they thought it was. I mean, economic reports have shown a very strong and very robust economy, not at all what the Fed wants to see. We've had 11 rate hikes of their short-term benchmark rate, the federal funds rate, other restrictive monetary policy decisions in order to slow economic growth, to try to curb consumer spending and demand and slow job and wage growth. And the reports have just not shown that. As a result, mortgage rates have risen to some of the highest levels in the last few decades. And really, it's in response to the market's anticipation that the Fed is going to ultimately hold their federal funds rate for much higher and longer than they had originally forecasted. Now, thankfully, Goolsbee on Thursday, he's one of the Fed presidents who came out and said some very favorable things about not only their projected rate hike path, but also his stance on the fight against inflation. Definitely favorable to the markets. We saw one of the biggest single-day drops in mortgage rates going back for a long time. Now, that rebound was extended into Friday with PCE, the personal consumption expenditure. The Fed's favorite inflation metric came in 1/10 lower than forecast. Not huge, but hey, we will definitely take it. Allowed us to drop from those multi-decade highs and get some improvements before the close of the week. So that was definitely nice to see. Now, next week, there is a ton of job and wage-related data throughout the week, ending up with the jobs report on Friday. So the markets will be paying very close attention to next week's reports. If you have any questions about these headlines or these rate trends, if you want to talk about how they impact you and your pre-approval options, definitely give me a call. We'd love to talk to you, all right? Have a great week.